Okay, welcome back to part 3 now. The question 7 came in from a gentleman, says, please could Philip, Gavin and Tom analyse yesterday's E-mini, S&P and Nasdaq in multiple time frames. I watched Gavin try to trade a top, yes I do remember that, and then he explained that he was looking for a no supply test in a rising market to go long. That's exactly what happened, but the market whipsawed for 4 hours before the move. So how can we time our entries so we can catch the moves? Right, a very good question. We'll start off by looking at the E-mini, and we're going to start off by looking, initially I think we'll go for the 15-minute chart because that was the one that I was using. Now Philip, this was a very interesting market yesterday. We can clearly see it was an uptrend. But as you're trading it live, of course, you don't have the benefit of all those beautiful bars that show exactly what it was going to do and make a nice new top there. Now, the gentleman that sent this in saw me trading 11.31 here and actually trying to take the pick a top here and actually go short. And in fact, it stopped me out. I believe it was that bar there. Now, what then happened was I said I was looking for a test in a rising market because we actually seem to appear to be having a lot of strength, and on the 5-minute chart, which we'll look at shortly, we never ever broke down the top of that supply line that you see at the top at 11.31.60. In fact, someone just corrected me, it was in here I was trying to trade the short, that's right, and then this bar here took me out, that is correct, and then it pushed up and it just kept going. And I said in the afternoon or later on, because I'm obviously in England, it would have been in the evening, I'm looking for no supply or a test in a rising market, which we get here. And then the market churned for some time, although every time it kept coming back down, it was on very, very low volume. Philip, what do you make of that chart? I mean, it was, I can understand what this gentleman meant was that, you know, it churned around for hours in here in a tight 2-3 point range, and it was almost like it was untradeable, but it then broke out up to here through this old supply area to the left. Now, all these bars, what's very interesting on the 15, very narrow ranges, very tight ranges, and very low volume. Now, if you see that on any time frame, what's your analysis of that chart? What do you make of it?
Right, well, first thing I say is obviously you're in an uptrend.
Yeah, which we now know. We didn't know that yesterday in here. So,
but if you go back further than that, you're in a constant uptrend. Because I wasn't watching this yesterday, but I was watching the FTSE live yesterday, and that's a similar situation. So
you note that there's no red diamonds, is what you're saying. It just continues to trend up, even in the
continuous uptrend.
Yeah.
What we have to do is look at those up bars on high volume and say, are they enough to actually stop that uptrend? And that uptrend's been in place now for quite some time. That first one that you've got highlighted there, certainly some weakness on there because it's closed in the middle. So there's supply there.
That's what I was with Sebastian at the time, and we really thought on the 5-minute chart we were going to get some no demand. When we shorted it, just so you know, it did come off down to 11.26. Our target was 11.25, and we let it run, think it was coming, and it poked back up. I thought, oh, it's an upthrust, and no. Unfortunately, we saw the buying in, and then Tom said we should have exited, which, in fact, we got stopped out.
But there is a but, I would say, on that up bar because it has broken up above the area to the left, so there's obviously absorption volume in there too. Now, after that, you've got the down bar which you're highlighting. There's clearly some strength in there because it's pushed down and they're prepared to support it. The thing is, it's never broken the low of that high volume bar.
I know.
That's the one I would highlight.
Yeah, and Tom Frank just said this was on non-farm payroll, of course, so we were waiting for the reaction to that because the news was quite positive. It was on good news. You expect the market to come off, and in fact, because of the uptrend behind it, they didn't mark it down. They were bullish.
No, they pushed the equity market up on that, and the bond market fell off very sharply.
Yeah, and the pound rallied as well. So
yes.
So okay, so we see this bar here. We've seen what looks like real serious weakness.
Yes.
Now we're comparing it behind us because you've got very high volume there. The next bar closes up, which was because it didn't close lower. Now at that point, I remember saying to Seb, that's unusual. You'd expect the next bar to close down with all that if that's a lot of selling there.
Yes.
So looking at this bar here, it doesn't produce a signal. Is that because the next bar is up?
Yes.
Yep. Yeah. So you see there's no confirmation there. No. So, but I'd already on the smaller time frame decided to take a trade. Now here we come back down. It's a very narrow spread bar. It closes lower than the bar behind it, but now I've got no volume, and it's almost closed level with the supply bar. Now that to me was a warning sign that my trade might not be working as I hoped. What do you think of that?
Looks like a little bit of no demand on that bar. It's quite a difficult one to read, actually, because there's a little bit of both in there, and you've got to be very careful of those. Yeah. But that's why the market then came off. But if they were bearish, they wouldn't have bought it back 2 bars later.
Right, that's the bit I want to talk about. This bar here was the bit that now this is very important when you're taking a trade. When you take a trade and you see something, I was doing something that I don't usually do. I was trading against the trend, and it was an experiment. We did make that clear, by the way, in the VSA Club. I think you heard that, Philip. I was very clear. We're experimenting with real money. I mean, we don't want to experiment. The reason we're doing that because there's an emotion attached to the trade, and I want to see how that affected me. And interestingly enough, the counter principle came in, and suddenly I've got very serious buying on that 15-minute chart. And if we went down to the 5-minute chart on the ES at the time, it looks slightly different. In fact, I think it was this bar here that was actually confirmed. So we had some stopping volume there at that old level, which was my trigger, and suddenly, bang, it stopped the down move. Now, what I should have done, and Tom basically wrapped me for this, is he said, well, look, you took a position, you were trying to tell the market it has to go down because you were short. Which, interestingly enough, I didn't think about it at the time, but having analysed the trade, I actually was looking at that and saying, oh, they're just holding it up, and I was trying to argue with Tom that this market was going to come off.
Yes.
Because, and I should know better. And yet here, there was clear stopping volume, and I decided to let the trade run. We got stopped out, but then I said, in the afternoon, if we break certain levels, we're going to be looking for either a test in a rising market or stopping volume or no supply. And on the 15-minute, we actually there's a lovely test here that was confirmed on the 15 as well. But this was much more meeting my trading criteria to go long because the trend was up. We had very few red diamonds for the whole day. And I know Tom talked about these diamond trending system, but when you see on 3 time frames, and if you use on the E-minis, the futures, a 5-minute, and then a 7 and a 15, if they're all lining up, which they were, you really, really shouldn't have been short there, even though I took a short trade. But in the afternoon, we did actually get back into the market, and here was actually the entry on these 2 bars and this bar here. But those 3 bars were the key, because you'll note here, if we drew a line here, you notice that the volume, as the price levels and it almost condenses the bar. This little down bar here is on very low volume, and then finally we get here a lovely little bar after we've seen no supply, which is almost the same as a test in a rising market. Is there a real difference between the 2 signals? I mean, there's no supply means that the market has to go up really after no supply unless it fails, and the market held that. I mean, I didn't enter on that bar. I actually had my buy order just above here. Okay, because I wanted to make sure the market took me in, and in fact that was the move that we caught. But then here and here was confirmation. They dip it back down, look, for more buying. Next bar's up, and then dip it back down here, look, on a lovely little test bar. Now that is a test on a level bar, Philip. The tail is below. Do you want to just describe that bar there for us?
Yeah, no, that's an ideal test. The point there is that it's pushed down, and then it's rebounded up, and the volume is low. Now, for the volume to be low when it was pushed down, there can't have been any selling there.
Otherwise, it had fallen. Yeah.
Exactly. So, and it's closed right on the high. So it's a really good example of a test in a rising market at that point, because you're starting to build your uptrend.
Now, Matt V is saying, could this all along here? You have no selling pressure on the bars after you've seen supply. Yeah. Now that generally, you don't see it very often unless you're in a bull market, but that is usually the start of some sort of breakout trade. Yeah. And in fact, that's exactly what it did. It broke out to the upside. Now, if we look at the NASDAQ, which was the other chart that was requested, you'll see on the NASDAQ, if I move it forward to yesterday's action, it wasn't dissimilar, although the NASDAQ definitely led the rally from the get-go. It looks slightly different here on the NASDAQ, because here we didn't really... We got a couple of tests here on this bar here. We got here a bit of stopping volume on this bar here. You see, this is where we look at the opposite. It looked different to the E-mini S&P in that we had a high volume down bar in an uptrend. Now that was what we were talking about earlier, that you see this. The S&P was testing low volume, the Nasdaq pushed down on higher volume and found support. So now we can prove the theory. It's almost at the same time, look, around the 12:30, 1 o'clock, that high volume in a down bar with the next bar up in an uptrend is bullish.
Yes, because what's happening is, as Tom has said many times, they don't want to lose control of the market when it's an uptrend.
Yeah.
And there are times when the professional groups will need to come in and actually support the market to make sure that doesn't happen. And that's what you're seeing there.
Tom, we're just looking at, we're talking about the trading yesterday that we did, where we tried to pick the top. It kept going up because it was bullish, and you were quite right. I saw a countermanding signal where I'd been short. The market clearly showed some stopping volume on the way down, and then it tested. And you actually said to me, if I was short here, I'd have closed that. And I decided to let it run. I was with Sebastian. I got stopped out of the trade. Then you were quite right. You said, well, this looks bullish because of the test. Now, if we read your newsletter from last week, you were absolutely spot on about this market being bullish this week. Now, can you just talk to us a little bit about why, and at the end of today's session, you're going to do a quick preview for us of the week ahead. Why were you so sure that there was going to be some sort of bull or some sort of bullishness this week?
Whenever you see these daily charts testing, there was a very clear test on Friday, not last Friday, last Friday, and there was another test on the Monday. You can see where the market went down, rallied back up, closed near the highs. Admittedly, the volume is not all that clear on the S&P, but it was two tests, one Friday, one Monday. When you see that, you're going to expect higher prices. And if you ever see the markets testing, you must assume that the market's going to go up. And that's why I said it was bullish. There was just a little bit of hesitation there for the previous few bars, a little bit of weakness there, a little bit narrow spreads, a little bit of what looked like a little bit of no demand. But you slap bang in the middle of a trading range, markets run longer than you think they will, and sure enough, if we remember yesterday, there was actually a signal appeared just before the move up.
Yep.
A big move up.
Yeah, so you're really convinced on the daily chart that test, I'm just trying to find it for everybody just to have a look. There was, here we go. Now we can see the line that I've drawn here. Now here, this is a down bar. It closes lower than the bar behind it. So the close 11.0350. It's 11.0225. The volume's pretty low, as you can see. The software gets that one right. Okay, this is on the 25th of February. Now we were broken. We've got through this old trading range. We've come back down. It does actually automatically produce one of your signals, Tom. And sure enough, we're in an uptrend. So that's where you'd expect to see it. You know, we're trending up. We found strength in the background. Look, right behind us over here. See this bar here?
Yeah.
And this bar here. And then there's the test that Tom's talking about. And now we're trending up again. Now, what be very interesting, the start of next week and what we're going to see, because we're right at a very important area of resistance at about 11.50, which will be psychological. So it'll be interesting to see, Philip, if we get up there. The FTSE's already making new highs, isn't it? So
well, the FTSE is absolutely level with the previous high, which I think was in December.
So it's going to
right up there. Now remember, that's Friday afternoon. We know what Tom says about Fridays.
Yeah.
There is a newsletter coming out, I recorded this morning, which it identifies the actual action on the S&P 500.
Well, perhaps we'll set, rather than get you to redo the whole thing, we'll send everybody here the newsletter as well. Yes.
Yeah.
Yeah. We'll
Gavin, could I just ask if you've got a trend line on there which you've just drawn?
Yep.
That uptrend line.
Yep.
What would happen if you turned that into a trend channel?
That was the one. Now, the reason I had my old trend channel in place because we broke out of it and found support. But if we now do as Philip has suggested, and we remember we're going to take the first two lows, which is where the test is, and here, and we're going to let go, and it's going to take the intersecting high. Well, that's perfectly good. In fact, any of those bars behind it would be good as well.
Yes, very good.
Yeah, not bad. And there we can see, look, now that's where we're at. We're right up at the top of the channel, and if you look, the line intersects here right along 11.50, so you'd almost expect it to go and have a go at that, wouldn't you? But if it's going up on low volume, ladies and gentlemen, I would be very surprised to see that go through there. Now, if it does break through on some high volume and tests, that's very bullish, isn't it?
Yes, it is, yes.
Yeah, we would be taking a view in the club then, the VSA club, that's something now to start looking at breakout trades.
You have to let the story unfold. It's highly likely that that market's going to go up and probably penetrate that top trend line. Then you become overbought, and you're vulnerable, very vulnerable then to professional groups or players coming in and want to take some profit. But if they're still bullish, as you said, they might test. But you must let the story unfold.
Yep, I agree. Don't rush in at the moment. You see, if you're chasing or buying anything, you're chasing the price.
Exactly.
The best place to buy is on down bars, as we always say, and of course you can see that here. And again, if you'd have listened to Tom at the beginning of the week and been long on the S&P, some of the stocks as well, you know, you can see here, listen to his newsletters because the market went from the close there of 1102 up to 1136, a 34-point move in the S&P because of that. So that's very, very important. Okay, let's go to the next question. And we just looked at that. Please have a look at the chart of the Japanese yen against the US dollar. It's been trading up and I am long from the test on the 4th of March at 4 p.m. Eastern. Please comment on the ultra high volume bar at 8:20 a.m. New York time, followed by multiple tests. Okay, that's the actual chart. And I've actually pulled that up in Trade Guider actually, so we can see that. And it's let me see if I can find it here. Actually, I think it's under my Forex chart, so just bear with me. I think it's that one, if I'm remembering rightly. Philip, I know you spotted this as well, so would you like to comment on that? So the gentleman has been long, let me just have a look here, from the test on the 4th of March at 4 p.m. So that's the 4th of March at 4 p.m. It's probably going to be somewhere around here. 4 p.m. That's 3 p.m. and that must be New York time. So that would be Chicago time. Okay, so that one there. Okay, and so there's a test. We're in a rising market, definitely. I think he said he's still long, but then that happens. What's your thoughts?
Well, I'm not very experienced on these currencies, but I have just recently taken the currency data feed because I want to learn more about these. Mm-hmm. And I was looking at this Japanese yen, and it seems to me that this market seems to spend a long while in a sideways movement, and then suddenly it shoots up really violently. Mm-hmm. And that seems to be a pattern which is developing in this. I've noticed this over the last few weeks. And you have got an up bar, the one that you're highlighting there on the chart, is a really ultra high volume bar. It has been tested 3 bars later. You can see we've got a down bar.
Let's just focus. This is the gentleman's question was he's long and he's come down, obviously seen that. Mm-hmm. I can't really comment on the last bar, that's unusual. Brad, if you want to type in here, mate, anything that you see here, I know you are a Forex trader and you're a Forex mentor, but this is interesting because that did test and it then continued to go up. And usually on that sort of action you'd expect the market to come off, which is why we see ultra high volume. George says he traded the daily on the yen and the daily chart offered some clues. I don't have the daily bars up on this, I don't have end of day on this computer, but certainly that would be interesting. Now, Philip, that last bar, it sort of just drops off. Mind you can't really do much with those last bars, can you?
No, it's very thin trading at the end there. They could be just trying to manipulate that.
Yeah, so really here... I'm
looking at the reaction after
actually,
that high volume.
I don't know, Brad's actually... Brad, have you got a microphone? I don't know if you... Well, actually, you can't pick up the mic, can you, for Brad? No, unfortunately, we can't hear you. But just show the daily quickly. If I switch my camera off, and you take the presenter just for a cut. I just want to have a quick look at the daily. I don't have it, but if you take the presenter, Brad, and just put the daily chart on so I can have a quick look at it, that would be helpful. So if Brad's able to, we'll see if he can post up the daily chart for us all to see. We're looking at the 20-minute time frame for those of you that want to know. It's a 20-minute chart. And if Brad is able to, we'll put that up. If not, I mean, my view of that chart there is... you've got what clearly looks like some weakness appearing, but then it immediately there's no sellers below it, which is very, very interesting.
There must be no demand after.
Yeah, I'm looking after that test. You've got 2 bars which are still quite high volume, immediately after that first test.
Here and here. Oh,
Yeah,
here.
and that's followed by that bar you just highlighted, which is up. There's a little
this
upthrust
bar.
there, and then no demand.
So basically, over the top, it does look like it's starting to come off, and then I mean on this bar here, again you've got test. So really, it's almost multiple tests all the way along the top. And here. Now I think if this mushrooms back over and comes back down back into this area, if it were me trading that right now and I were long and it was at the active market, I would be looking very carefully because it surely will come back down into the body of that bar and have a look at it, won't it?
I would have thought so, because we're fortunate actually, because there's the live bar at the end that's and we're not trading. If you follow that line across, which marks the low of that last bar, it's actually broken below those two higher volume bars which I just talked about.
Absolutely. You mean this? You mean, just to be clear, you mean these bars here?
Those two there, yes.
It's taken it out, hasn't it?
It's taken the lows of those bars out.
Yeah.
So there must be some weakness in there. Obviously, there's that up bar. There was supply on there.
Yeah.
That first up bar on the really ultra high volume that's put the signal on, the red signal. There must be supply on there. It was just a question of watching the market afterwards and seeing whether there was enough supply in there to actually stop the move.
Yeah. No, if I certainly I would be watching this one closely on. If you're trading this, watch this very closely on Sunday night. Definitely. Okay. Right. All right, Brad. Don't worry about it because I don't think we'll be able to pick it up anyway. But I think that with the principle with it, I see what you're saying, Brad. He's coming as not as a presenter. I've got you. Don't worry about it, Brad. No problem, because we're a bit short. We want to try and get finished here in about an hour. We've got more to go. So, Gavin, I noticed that you and some other traders in the room use odd number timeframes as compared with the customary 5, 10, 15, etc. Do the odd timeframes offer an edge of some kind? Not really. I don't find that.
I just use the normal 5s, and
I use 3, 5, 7 and 9, and that's really because somebody did show me that very early on in my trading days. But time frames, Tom, there's no benefit to using an odd number time frame to it. I mean, with a stop there definitely is. You put your stops on odd numbers. You don't want to put them on the round numbers because the herd will always use round numbers.
Well, the thing is, with a computerized program, it's very, very easy for you to test this. Try the different time frames, and maybe you may find something we've missed. Like we look at a 9-minute, don't we? That's not bad. It's interesting. But just try the different time frames and see how you feel about it.
Yeah, I think it comes to personal style, doesn't it? Personal preference.
I think so.
I personally found that by practicing with different time frames, going to a 1 minute, a 2 minute, a 5, trading intraday, you become comfortable with certain time frames. What I do all the time though is when I'm trading, I'm always using the scanner. And if you look here, I'm able to, when I trade, I will take actually a picture of my trading setup at home so you can see it. But you can see here I've got all of these different time frames that I look at on the different contracts. Okay, there's the NASDAQ, the 1, 2, that's the one I traded in New York, so you can see what I was looking at. I was really focused on 5 time frames, as you can see. I entered on the 2 because I had to enter on the 2. There was very little time and I needed to see if the 15 minute was bullish, which it was. Then the 2 minute gave me the entry, and I was able to make my successful trade there. Erica, no, that'd be a pleasure. We'll have a look at that stock. Remind me at the end before we go. We'll have a look at that. Alan Bowers, hello Alan. 90 is going to be a big number in the JPY, which it always is. Yeah, it will trade opposite the dollar index. Pleasure, Eric and Debbie. No problem there. Okay, all right. Let's go to the next PowerPoint slide, which we've done that one. Oh, right, okay. Well, this is one really for you, Philip, if we can find an example. What is the difference between a test and no demand? I watched Tom explain that true no demand has to have the majority of the body of the bar as an up bar. And then he said a test can be an up bar as well. Can you clarify that?
yes. Well, the first point he made, no demand has to have the majority of the body of the bar as an up bar, is quite correct.
Right, let me see if we can find a really good example.
That's quite correct.
Somewhere. Let me just go to... let me just think of something that's been trending down. Let's go to the GBP 4-hour chart. Okay, and let's see if we can find a decent no demand bar. Okay, I think we can here. Okay, So let's delete all my lines so you can see all this. Okay, and let's see if we can now blow that up to 20 bars and move backwards. Okay, now there's something about no demand. Okay, now we're going to talk about the body of the bar. Okay, now the body of the bar is the high-low of the bar. Okay, now this, Philip, is genuine no demand, isn't it? It's in the right place.
It is.
And the bar itself, if we look at the body of the bar behind it, if you look at the closing price, it hardly comes down below the closing price of the bar.
That's correct. Yes.
Okay. Now, no demand for a short entry has to be in a downtrend.
Yes. Yes.
Has to be in a downtrend. Now, I know we can pick the tops with these no demands, but that to me is dangerous.
Very dangerous.
But
yes.
That is no demand. Now, what do we notice about the body of the bar, Philip? What's important about that?
Right. The majority of the body of the bar on that particular example is higher than the close of the previous bar. Okay, that's the critical point.
Okay, let me just mark this on here for everybody. Yep. So when we talk about the body of the bar,
it's the range or the spread of the bar.
I'm just going to put a black line on it, on the top, and then on the bottom here, I'm going to put a nice black line on that. Brad, I think you've got your mic open, mate, if you've come in as a presenter, because we're getting some background interference. Could you switch that off? Cheers, mate. Yeah, I think there was a bit of background interference there. Okay, so there's the high and the low, okay, of the bar. So that's the body of the bar. That's what we call it, correct?
Yes, yes.
Okay, now the body of the bar is above the body of the bar behind it, okay? And we're really interested in the closing price of that body.
Yes.
That's the key to it.
Yes.
Forget the top on this bit. It's where it closes, and it starts to form. You can allow a little bit into here. Okay, let me just Brad, don't worry about that, mate. Thanks for that. We're gonna sort of move on a little bit because of time. So thanks anyway, though. I appreciate your help, mate. Appreciate it. Brad's in Australia, and he did say if we wanted to look at that daily chart, we could do, but we've got quite a few more charts to get through here. Notice here the body of the bar starts to form on the close of the previous bar. It ticks up, ticks up, ticks up. Nice narrow spread. Why is the narrow range or spread, Philip, important here?
Well, the narrow spread shows that there's first of all, you've got to look at the narrow spread in connection with the low volume. You've got to take the two together. What it's showing you is when it tries to push up, there's very, very little interest in the upside of the market.
Yep.
The low volume tells you that. Mm-hmm. But no demand doesn't have to be on a narrow spread, but it's better.
Yeah, I would agree. You do see wide spreads, but
you do
narrow
sometimes,
is better.
but narrow is better, because simply there's just no interest in the upsides that tries to push up. No interest at all.
Mm-hmm. And what about the next bar? Is that important to no demand?
The next bar must be down to confirm no demand.
Okay, so if you're placing an order on no demand, you don't actually place the order on the no demand bar. You wait for the next bar to tick through it, and I usually put my order, you see where it says 5418, that would be where my sell order is placed, because I've seen no demand, but it's confirmed by the bar that starts to tick below it, and then it takes me into my position, and usually I will put a stop above the previous reaction point where I've seen unusual volume. In this case, probably up around here, about 50 pips away. And that's in fact bigger than that. That would be about 90 pips, but it depends on the chart. But that is no demand, and it's no demand because it's in the right place.
Weakness in the background.
Correct. All right? So that's no demand in the right place. Let's just see if that answers the question for that gentleman. Now, on a test, Philip, you do get tests that look like they're no demand, but the body of the bar, in fact, we saw that on the previous, if you look at the previous charts that we looked at, where we looked at tests, you do have the body of the bar ticking down. In fact, let me just refresh their memories here. I think it was on the mini S&P, I believe, and I think it was that one there. Now there, the close is level with the previous bar, the body is lower, but some people look at that and they say, well, it's almost a level close, that's no demand, because the volume's less than the previous two bar, but it's not, is it?
No, it's not, no, because it's tried to push down below the close of the previous bar, and it's come back to close on the high. Now, if that closes a slight up bar, that would still be a test, provided most of the range of that bar was below the close of the previous bar.
Right, can you repeat that, because that's very important, slowly and concisely, so people get this.
If that bar had actually closed as an up bar, that test bar,
higher than the bar behind it,
higher than the bar behind it, That's still a test, provided that most of the spread or the range of the test bar is below the close of the bar before it.
Perfect. And the next bar then closes up, confirms
it.
So it
yes.
couldn't be no demand.
Mm.
No demand, you would expect the price to close lower,
Exactly.
but it couldn't be. Or a failed test if it was failing. So there we are. Let's just see if that answers the question. Good. Excellent. Okay, good. If there's any questions on tests, now is your time. I think we've pretty much covered that a lot last week as well.
Yes.
I didn't get. We did have only 1 or 2 questions there. People weren't sure about that specific thing about the up bar. I think sometimes people take things a little bit too literally.
Well, I did. When I was learning this, I did the same.
Yeah, and you've got to sort of broaden your horizons a bit
Yes.
and say, look, not every bar is going to be exactly that.
No.
And I had the same trouble. You've got to understand it's a language that you're learning, and sometimes there are going to be things that don't look exactly like they should do, but you are experienced enough to say, yeah, no, that's a test.
Yes.
And it comes in time, doesn't it, Philip?
It does.
Philip, please can Philip explain how he selects his longer term investments and what criteria he uses to stay with the trade?
How long have we got?
You've got 2 minutes. No, I mean, however long it takes you to. I mean, look,
No,
I realise that an interesting situation here. I mean, you could spend 2 hours on a seminar on that one, and I'm
Easily,
sure in the
yes,
VSA
yes.
club on your stock when you're doing your stock event, you will. But for the purposes here, you have some criteria, perhaps 5 minutes on that, and what you look for.
Well, the first thing I'd say is I do look at fundamentals. But I'm looking at fundamentals if I'm buying something for really long term, because I think that's important. There are 1 or 2 things that you do need to look at. One of which is if you're picking a stock, you need to have a stock which has got good management. Now that's very difficult to judge, but you're looking at a company which doesn't consistently disappoint on figures, for example, and come out with figures less than expected. That's one of the things. Another thing I look for is a company which has good cash flow. That's very important. I'm not so interested in profits that company makes. I'm more interested to make sure that those profits are actually converted into cash, because that's important. Because if a company can make profits, if it's not converting it into cash, there's no advantage in that company. I'll give you an example. If you're looking at a company which is apparently making good profits, and its sales, say, are static, but its stock keeps going up that it holds and its debtors keep going up, it's bad management, and you don't really want to be looking at companies like that. Third thing I look at really is probably borrowings. If a company's got very high borrowings, I personally tend to not be interested in that company. But that's a personal choice I make, and I exclude a number of stocks by doing that. Now other people may be prepared to accept companies with high gearing. In fact, if it's a strong bull market, you probably would be wise to do that. But recently I've felt that with the current situation in the economy, you don't want companies which have got huge borrowings, because that is a drain.
You're basically, I mean, we know that these hedge funds do a lot of fundamental research, and yet some stocks, you know, I remember Jim Cramer saying Fannie Mae blew out their earnings and their fundamentals were brilliant.
Yes.
and still yet the market collapsed. And so fundamentals are important, but how much does VSA confirm what you're looking for? Because you can have a fundamentally sound stock that look, it ticks all the boxes, and then you see the end of a rising market because all the analysts are bullish and the whole thing collapses. How do you deal with that? Do you use the chart to confirm?
Well, definitely, yeah. Those are the first points that I would use, and that limits the amount of stocks I've then got to look at. What I then do is I go to the charts, and that's where I actually select my stocks from the number that I've got left. And what I'm really looking at is 2 things. I'm looking either at the company which has had a downtrend and we see accumulation taking place. Now I don't necessarily buy straight away. I'm looking for that accumulation then to be tested. And then I'm looking, hopefully, for that stock to turn into a rising trend, and ideally buying a testing a rising market, because then I've got low risk entry point. Sometimes I may decide to buy, if I'm prepared to sit on a stock, I may be prepared sometimes to buy a test into the area of the accumulation, which I know is early. And in trading you probably wouldn't do that. But providing you put your stop in the right place, you can sit it out and wait. And if it's a little bit different sometimes with a stock to trading, because with a stock, if you've got a good income on it, pays a good dividend, you can afford to sit on it, providing it brings in a good return. Providing it's not tying up money that you could invest elsewhere at a better return, you're prepared to sit on that. And other stocks, if they're going up, I'm particularly looking to see stocks that are outperforming the index.
Now, just explain that for a second. Outperforming the index.
Right. There's two things you look at there. First of all, you've got an individual stock. The next thing you go up to is this, what we call the sector index. And then we go up to what we call the parent index. So we've got the individual stock, and that individual stock will form part of a sector. So
Can you give us an example?
Example, if we took, say, Bank of America in the US, that would be part of the banking sector.
Right, that makes sense.
So you'd look at the banking sector index. And then from there you go up to the parent index, which Bank of America, I think, is a member of the Dow, or say the S&P.
Yeah.
So you'd look at the S&P. Ideally, what you're looking at is you want the parent index to be going up. That's the first thing. You want the sector index to be going up, and ideally outperforming the parent index. And thirdly, you want to pick the best stocks within the sector index.
Now, ironically, the Trade Guide or End of Day program does all this for you.
It does.
We don't really talk much about it.
No, we
do
don't. And that's
so
something
you're
we
going to
need
focus
to
a lot on that.
do.
So what you're saying then, to select a good stock, you trade in harmony with the parent index.
Yes.
If it's down, I assume you look for weaker stocks because they're
Yes.
going to fall further. If it's strong, you're going to look for stocks that are outperforming the sector
Yes.
and the index as
And
well.
the index, yes.
So, and this is very much how I look at things. If you look at the banking sector through 2009, it most definitely, from February onwards, led the market.
It did, yes.
It was the strongest sector because the scanner picked that up in January. And the strongest stock within it was Goldman Sachs and JP Morgan,
Yes,
funnily enough.
yes.
Those were the two stronger ones, which I've been talking to them and crowing about those and telling people to recommending those stocks. But then, of course, they started now to fall first, which they would, because professionals bought them early.
Well, the other thing you've got to remember with the stock market is you get what's called sector rotation,
Yeah, we talked about that briefly. Yeah.
which is where a sector, having been bought and gone up quite a long way, the professionals may decide that they want to take a rest from that stock, or they think it's gone up as far as it's going to for now, so they sell and they take their profits in that stock and perhaps go for something else that's not gone up very much at that stage, and they rotate into that stock for an advance in that stock.
Right. So anybody basically sitting listening to this presentation, if they're stock traders, Tom, could I just ask you, if I may, we're talking about the scanner. I know you're very, very proud of the End of Day program and you developed the scanner there. How important is it to pick a stock that's acting stronger than the index if it's rallying?
Well, it's very important because, again, we only teach simple logic. And the logic is this, that these companies, they have all these, I should say, sorry, the syndicates and professional traders, they will send people out, as Philip just mentioned, to look at their books and to make inquiries about anything that's happening. They will know all about those stocks. Well, that's fine. Now, their sentiment is then reflected in the parent index, because you will find that when the parent index falls a little, it may only fall 1 or 2 bars, you'll see that there are stocks refusing to fall or holding up. That means that the professional interest must be thinking they're bullish. But those that fall greater or weaker are those weaker stocks that professional money is not really interested in. So in the bull market, you need to be interested in those stocks that are acting stronger than the index. And if you see any testing or anything bullish, those are stocks you need to go into.
And the opposite, if it's a bear market, you really want to short things there, that you don't want to be long in a bear market, so you buy put options or whatever on stocks that are maybe falling faster than the parent is.
Yes, you can do that. That's another trading skill. Options, we have people making money with options, but what I would say with options, those people that seem to make money are not in them all that long.
No.
4 days,
Yeah.
they're out.
Well, Matt V actually said earlier on, you can make money with options. You don't have to be in them till the end. But the many do expire, that's true. But you probably, in fact, the most successful options traders I've met are only in there for 6 or 7 days sometimes,
That's
not
right.
a long time
Less
at
than
all.
that even.
And they get rid of them and they make money that way, definitely. Erica was asking, do we have a scanner for real time? Absolutely. It works differently than the end of day scanner, but it's scanning for different things. It's looking for unusual volume activity, And the scanner, I don't know, Erica, whether you've got the software, but the real-time scanner is looking for unusual volume. It looks for signals, and it scans multiple time frames. Absolutely, we have a scanner, definitely. Okay, I think that was good. And you're going to be doing a seminar, aren't you? And you're going to go into a lot more detail in this.
I am. There's many more things I could say.
Within the chart reading masterclass, it's a subject all on its own, chart reading. Yes. But then selecting stocks is a. We did actually used to have a seminar called How to Pick Stocks That Are Ready to Move, and we'll do another one, I'm sure, to complement that. Question, I think, for you, Philip. I bought UK stock British Airways on the 6th of February 2009 when I saw climactic action followed by a 2-bar reversal. I have followed the weekly diamond trending system, which I use, and I'm still long. At what point should I be thinking about exiting, and was my analysis correct? And this is from a lady. And it was British Airways. I think I brought that up. It's BAY, I think. And I thought,
yes.
Yeah, let's just close some of these charts here that we don't need. Okay, and I think I must have it under my UK stocks. BAY. Okay, and we'll do the weekly chart, which is here. Okay, and the question, let me just repeat it. I brought British Airways on the 6th of February. So that's going to be somewhere around here, I think. January, March, 27th, 6th of February. There you are, Philip. Oh, that's very good entry, if you ask me. There's a better one further up, but there we go. So we've got...
I can see exactly why she bought that.
Yes, so can I. That's very, 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 very good. I mean, if you brought that there without waiting for the test here... Which would have been better. I mean, you're probably under a bit of pressure there, thinking, but if you put the stop, I'm sure that's where the stop would be, somewhere under there. You didn't enclose your stop, but that's the buy there, Philip. Now, do you want to explain why? Because it's in a downtrend there. That's pretty aggressive, but obviously now you can see that if you brought, I think she said the entry was around 139 or something, or 140. It's gone up to 228. That's a very good trade.
It is.
Do you want to just talk through that one, Philip? That's pretty good.
Well, first of all, she's got clear climactic action, where Gavin is just highlighting,
which is confirmed by the next bar.
Yeah. Which is confirmed by the next bar. And actually, if you look, you've got the bottom reversal, which is where the entry was taken.
Here.
And the first bar of that bottom reversal is a down bar, and it's back into that area on lower volume. Now, it's not a clear test by any means, but volume is lower, so at least some of that supply has disappeared, which is a good reason, perhaps. And also, that bottom reversal's got the low of the second bar lower than the low of the first bar.
When it closes up there, yeah.
Closes up on the high. So, yeah, I can see exactly why that was taken, and that comes back to what I was saying, that with a stock, actually, I don't think this one pays dividends, so that counteracts what I was going to say.
Well, no, but even here, look, I mean, you get beautiful principle here. You've got the climactic action on very high volume. You've got your 2-bar reversal, so now the volume is less than this climactic, so that's a good sign. But then to confirm it, they bring it back down, and that's got to be no supply.
Exactly.
There
that's
it is.
A lovely example.
That's congratulations. You know who you are. That is a very, very good stock. And Tom, I think there your principles there.
Spot on.
If you can see that on the weekly chart, and look how long that took to materialise before it did rebound up. And there's been so much bad news at that time.
Oh yeah,
huge.
Oh, it's terrible. BA went out of business, all
Yes.
of this, great, and then they made terrible losses. And yet the stock, it does go to show you a little bit. If I was doing fundamentals on British Airways, and I'm a member of I'm a gold card holder, I travel with them all over the place, and you know, I love the airline. Don't get me wrong, but I have to say their stock was stinking for a long time. But when I actually went and looked closely at that, it does go to show you they're buying it on the bad news.
You're obviously supporting the airline.
Well, obviously, yeah. So there we go. Matt V was asking here, basically, is there an advantage to looking for stocks that decline less than the parent than for those that rise faster than the parent during a rally?
Well, if a stock is declining less than the parent, then that stock must be bullish.
I'd agree with that too.
acting stronger. Oh,
Yes, it's acting stronger than the index.
That's right. That's what you're looking for. All you're looking for is a sentiment of the professional money. All those stocks that make up index are traded by professional money. All of them. FTSE 100, the S&P 500, the Dow 30. They're all definitely traded, and that you'll see If a stock's acting weaker than the index, there's a good reason for that, and those are the ones in the bull market you want to keep away from.
Yeah.
Now, I was going to say on Monday I was watching the FTSE, and the FTSE I think was up something around 35, 40 points on Monday, which is nearly 1%. And if you look at the major fallers, I think the Prudential were down something like 11 or 12% on the day.
That's an insurance company.
Yes,
Yeah.
That's the leading UK insurer. Several of the big banks were down very heavily. It was all tied up with Prudential's proposed takeover of AIG's Asian interests, I think.
saw that, yeah.
There were huge drops in the financial sector on Monday, and the index still went up.
I noticed
Now, that's interesting. If you look at the stocks that were up and down on that day, it's quite interesting to see how you got that rotation.
But of course, if they're bullish, they'll be buying those financial stocks because
they'll take advantage of that. Yes.
Now, this particular question came from a crude oil trader who trades long-term crude oil, who saw the YouTube video I did last year. Remember that, Tom, in 2008?
Yes.
Where you said to me, well, that's not going to go up there. And I said, well, what should I do? Go on YouTube, you said, and tell everybody. And I got absolutely lambasted by all the people for weeks telling me didn't know what I was talking about, because T-Boone Pickett's and all these big analysts at Goldman Sachs were predicting $200 a barrel, and you and I were predicting $100 a barrel, and it went down to 30. Even we didn't predict that, but we did predict weakness. And as Tom said, it wasn't that we're clever or anything like that. We can read a chart. But this particular comment says, please give an opinion on crude oil. I saw a YouTube video when the top was marked, which is the one in 2008. Are we seeing a top now? And what is the long-term view of the experts? Okay, so let's go to the daily chart of the crude. Right. Well, the first thing I did was draw a trend channel, and we're in a strong uptrend. Okay, so the first thing I would say is no, I do not see a top here at the moment. And I've looked on the weekly, and I looked at the daily chart, and I can't see a top. And also, there's no real news about crude. It's just very slowly gone from 30 to 80 without anyone really noticing, apart from at the petrol pumps.
Especially in the UK.
Well, especially in the US, it was at $2.50. It's now nearly $4. But no one really notices when no one tells you. Because what they do every week, I've noticed, it goes up a couple of cents. No one really notices. A couple of cents. No one really notices. It's not until there's mass panic, and it's at that point they sell it. So I don't see an end of a rising market. Let's go and have a look at the channel, because the trend channel is getting respected. But what happened here was actually quite interesting, which is why I focused on this. We fell out of our channel, Tom, and we came in this particular area oversold, and professional money are still bullish here, in my opinion, because there's a lot of buying on these bars here.
Oh yeah.
Okay. Massive buying here. You've got again here. It's a support bar. It's not really a test bar, but you've got a test here. Look, okay, no supply. So I am actually bullish on crude at the moment, as my view of it. Tom, any comments here?
Well, no, I think you're right. I think it is bullish at the moment. We just have to let the story unfold. We know that what's going to stop this market going up will be high volume and up bar.
Yeah.
Massive volume coming in, but here I think the volumes, well, that is a down bar. That volume could easily be part of this down bar here.
Yeah, there was some negative news that day about oil, which is why I thought I looked at it.
That's why they bought it.
And what was good, it was into this old area to the left.
Yes.
So again, if you can spot these, and this is for I know you're going to trade intraday, you must use the end of day chart to decide what you're going to trade on intraday. Correct, Tom?
Yeah.
And you and I have been picking that pretty well.
Yeah.
Because if you look at any shorts I took last week, I was under pressure. But every time I took a long trade, I made money. Because the market was going up. That's not rocket science, is it?
You're swimming with the trend, the flow.
Exactly. And if you can see these moments, I mean, again, you've got to look at the bigger picture. Notice that we always try to identify, this hit the bottom of my trend channel. When it fell out over here, I thought, oh, hold on a minute, this looks quite weak. But of course, if they're bullish, they're going to come back and buy more of the contracts. And that's why it's gone back up into the bottom area of my trend channel here. Okay, and I expected that you should see oil in the next week or two go to 85. Wouldn't be surprised at all. Wouldn't be surprised at all. Okay, we're doing okay for time. We've got another 10 minutes here to be on schedule. And I see a couple of questions. We've just looked at that chart. Next question. Is Australian stock MQG, this is one of our Australian customers, there's many of you here. Is Australian stock MQG, Macquarie Group, which I believe is a bank, okay, in an accumulation or distribution phase. Is that you, Sheenan, that just private message? I'm not sure if that is you because we've got so many people. Okay, hi Sheenan. You know, everything's going well here. We're just about to wrap up. Is Australian stock MQG Macquarie Group in an accumulation or distribution phase? Okay. Macquarie. Okay, let's put up 200 bars. Oh, this is fairly choppy old chart. Let's put 500 bars up. I would say it's in distribution. What do you think? Maybe we should look at a weekly chart. What's
yes,
that?
that's a good idea.
Let's try and look at a weekly because that sort of is
clearer.
pretty choppy. There's a lot of volume in there. Let's see if we can convert that to weekly. So we go MQG ASX, W. We'll see if we can just get a bigger time frame, and that will give us a better idea. I don't really think we've got a clear idea there on the daily. There's buying on that bar there for sure. I would say it's been accumulated, but I'll let Philip have a look at that. What do you think? I think there's some accumulation going on, and it started, by the looks of it, back here. It looks very similar to me to Goldman Sachs, but it's failed to rally. Goldman was back up to its old high. This has just gently gone up, and it's moving sideways. But I would say that's an accumulation. I don't know, Tom. What's your thought?
Is this the end of the chart?
Yeah.
Well, certainly some buying here. But
Yeah.
this is waving down here. The distribution was up here.
Yeah. Let me just show you what Tom's talking about here. For the gentleman concerned, we're saying that if you look at the big picture, there's your distribution phase right there. I'm sorry, I'm not very good at drawing with this pen, but there it is. It's like being back at school again. Look. But it's not very good, I'm afraid. But there you can see, there's distribution at the top. Look, here you come back up. You've got high volume, you've got up thrust there. Look, and it just comes off. Now it keeps coming down. But watch this bar here. Now look at the contracts on that bar where I've got the vertical line. This is the bar here. I'll take so it's this one here. Look. Massive volume. Now it doesn't stop the market. It's very similar to Goldman Sachs, but we come down and on this bar here, which is looks like where they're stopping. The volume is a lot less than that bar there, and that's a principle in its own right. Let's take the drawings off it for a second, and let's just put on here what happens. Now let's try and zoom in a bit. Okay. Well, the first thing you're going to want to do is put a trend channel on here. And it's difficult because I mean, if I was to take the two first points of support, I'd probably take that one and that one, Philip, or would you go further out?
It's difficult to draw a trend channel on that.
Well, it's moving sideways. I mean, it's almost like you probably want to mark the bottom.
I mean, this is a weekly chart, so
it's weekly, so it's in a very tight.
Sideways.
Yeah, it's a very tight range. Let's put we'll put a bottom on it here. And then at the top here, where it's definitely resisted there. You must always do this. It's very important because
This looks if it wants to come off, doesn't it? What I can see of
it
it.
certainly looks like it doesn't want to go much further here.
No.
I mean, it's coming off because of this.
Wants to drift off by the look of it.
Yeah, it certainly. If it takes out 45, I think this particular gentleman was looking to buy this.
It's going to trade in harmony with the parent index.
Yeah.
And you need to study the parent index very, very careful. And as soon as weakness comes in the parent index, if this one drops, then you know it's acting weaker than the index. But it looks as if it's rounding over. It looks as if it's in a slow downtrend.
I would suggest too that is actually acting weaker than the index because the Australian index has been following the other markets.
Yeah, I think so.
So
there you go. There we are, sir. I would say at the moment, I certainly wouldn't be rushing to buy that stock. There's better ones. And it is actually moving sideways. Until it takes out $58 and the market continues to go up and tests that would be a better entry. But you do have, the good news is, you do have upside advantage to it. It's got an old high there of 99, so it's got a 50% move up if the market takes it. Do you agree, Philip?
yes,
Good. Okay.
potentially yes.
Alrighty, I think we're nearly there. We've got one more. Okay, now we have got one other chart that I promised Erica we'd look at here. Let me get rid of that one and that one. Okay, I'm assuming, Erica, that's a US stock, mRNA, and a daily, and we'll look at the weekly. Yep. Okay, well, we'll start with the weekly. Ooh! Oh, dear me.
This would be false data, that.
I'm not sure, I don't know. I can't
It's
figure
highly
that out.
unlikely that it's up for us at genuine.
Well, it's showing massive volume on these bars. Now, I'd like to look at that with another data feed, but let's just assume for the moment that is correct.
Quite low price, isn't it? So that may well be.
You think that's real? I would think there's some news about this stock encouraging buyers. I would be very cautious here if that's real. I can't validate that data. So she bought it at 80 cents. So it has gone up. It's up at 1,000. But I mean, if that's genuine, Philip. I mean, they're holding it up at the moment, but
That's only just because of the index. But
I mean, you see this occasionally on some of these stocks.
yeah, I mean, if that data is genuine, that looks extremely weak.
Yeah, I
That's
wouldn't.
not going anywhere.
I'd be,
Negative VSA principles all the way across.
I would
there.
be very cautious. I would be moving a stock.
the index.
Yeah,
It's
I mean the
everything
index.
is
It looks like
negative.
the index is holding this one up, and then whatever it's in, and
Everything
then
about that is negative.
well, yeah, there's nothing good about that. But it looks like it. They're trying to get people in to buy this stock. But just be very careful. I mean, at the moment, it's certainly been trending down. This is the sort of thing you're going to have to watch out for. Is you can see the same thing probably happen. Go and check the news on this stock, 10th of August 07 and 19th of October 07. Right, go and check that. And Matt V has just confirmed that Reuters data confirms this is real data. I would not be touching that stock as a buy.
No.
Certainly, that's my view.
Well, it's sort of penny
Because
stock,
that-
really, isn't it?
It's like a penny stock, and what they do, they'll use news or anything to get you to buy it. It will go up a little bit, and then that's the bar that will catch you.
So it may well be that there's not a lot of liquidity in that stock, which is why you're getting those spikes. That
Yeah.
can often happen on these smaller companies.
Well, what they're doing, there'll be some news. It could be an email campaign that goes out. It could be something to encourage you to buy. So it'll be news. It'll be positive. It'll be got to buy this, do this, and you can see by the very fact that the price spikes up and comes back down and holds. They're holding it up. They'll probably have some more news, and then bang, that'll come off. I don't like that at all.
Not that's got that far to come off.
Well, it's got nothing, is it? It's nothing left. It's 80 cents, I think. If you've made 20% on that, I'd be very happy with it.
Yes.
Thanks very much.